Okay, good morning everybody. I know there's a slight delay with the live feed, that's why I was silent there for a couple of seconds, so thank you, Ben. And yes, good morning. So welcome to the Finance and Performance meeting on the 19th at 10:30, as you're obviously all aware, that this was moved from I think it was the 8th of October, which was the normal evening meeting for one or two reasons. So yes, so welcome everybody. As you're aware, with this system you can't see everybody at once, so obviously if you do want to speak, you'll have to indicate somehow or wave your hands. Certainly those are on the screen, but obviously not everybody is on the screen, so we'll manage as we normally do. And obviously if you're not speaking, could you mute? So firstly, also thank all the officers for the papers. Wasn't necessary when I was reading them, but they are very good papers, I think. And as per usual, obviously expected all members to have read them. So if we can keep it succinct, and in relation to the presentations, appreciate all the hard work that you've done in preparing the reports, but we don't have to go through them line by line or paragraph by paragraph. We can cut to the salient points, as you would expect me to say, as I've been saying the same thing at this committee for how many years. So without further ado on that note, I move to item 1, which is apologies for absence.
Thank you, Chairman. We've received apologies from Councillor Roger Clitheroe.
Okay, I think everybody else is here, so thank you for that. And so the minutes of the meeting on the 9th of September, everybody happy they're a true record? Just wave if you're happy.
Yes, okay, Mr. Chairman.
Brilliant, thank you all. I always think this is going to go quite quickly until we actually get into the meat of it. Item 3, any declarations of interest? Nope, okay. Don't hang around on that one for long. And item 4, questions of members under Council Procedure Rule 10.3.
There are none, Chairman.
Okay. So straight into item 5, which is the quarterly performance reporting, and then obviously Q1 of 2021. So over to you, Samantha.
Thank you. Good morning, everybody. So the performance report this time covers Q4 from the last financial year and Q1 from this year as well. And it's following performance clinics that were held over Microsoft Teams this time. So as always, it's a highlight report which shows the performance indicators which are consistently underperforming or have a government target set. And we also look at the establishment figures and areas of achievement as well. So I'll just go straight to the appendix if that's okay and give a brief overview of each page. So on page 2 of the appendix, we've got 2 pie charts there, and they show the numbers and percentages of all performance indicators which were overperforming within their tolerance band or underperforming for Q4 on the left and Q1 of this year on the right. So you'll see there are more performance indicators in Q4 because we have some annual measures which are only recorded once a year during that period. So on pages 3, 4 and 5, you'll find the measures which have been underperforming for 2 or more consecutive quarters. So page 3, you'll see no work was completed on the Greenway, so the target's not been reached there for that one. And the recycling loss to contamination is also underperforming, as it often is. However, I think from the comment, you'll see that in the latest Encircle newsletter to residents, there's been some further information provided to advise on what can and can't be recycled. So that's what they're doing on that one. On to page 4, the employees receiving a personal development review, the implementation of internal audit recommendations, information requests being dealt with within 20 working days, and our purchase orders raised before the invoice date. So they're all underperforming for the last 2 quarters. But you'll see there's comments provided against each of those. So hopefully we're happy with those. On to page 5 then. A number of priorities, new priorities that the Economic and Commercial Development team wanted to target for. I think they've now decided they're no longer a priority, and the comments should reflect that as well. Okay, and on to page 6 then. Are overperforming measures which have government set targets. So these are the planning applications processed within required timeframes, and they're performing well. On to page 7, we have measures which are within the tolerance set of the government targets. So some more planning ones. These are our planning application decisions overturned at appeal following a 2-year period. So all of those planning measures performing really well. And then further down the page on page 7, we've got a graph which shows the invoice payment measures. So you'll see that all invoices have been paid within the government target of 30 days, and almost 99% of our local suppliers have been paid within 10 days for Q1. On to page 8, we've got our employment statistics. So the table at the top shows the picture at the end of Q4. So that's for the whole of the last financial year. So we had 7.96 days lost on average per full-time equivalent member of staff. And that breaks down to 4.73 long-term and 3.23 short-term. And you can also see from that table how we compare to Corby and Wellingborough. So that actually equates to 1,453 days lost to sickness across the last financial year, across that last 12 months. But then you'll see we only had 87 days lost in Q1 of this year between April and June. So we're seeing a real massive reduction in sickness there. And the bar charts beneath those show the split by service area. So for the last year on the left and then Q1 of this year on the right. See how it breaks down by service area. On to page 9, we have the staff turnover by service area, and again the last financial year shown on the left and Q1 of this year on the right. And then there's a trend quarter by quarter on the line graph below as well. Okay, on to page 10. We've got a chart that shows the headcount, FTE and vacancies figures. So based on full-time equivalent posts, the orange segment on the chart shows the amount which are vacant, and then the green is the amount which we've got in post. And you can see from the tables below which post staff have left from and started working in during Q4 and Q1 this year. And then the final pages, so 11 to 14, all just show lists of all of our areas of achievement across each service area. So I won't read through them all, but in addition to the very low sickness figures, I think one big theme mentioned across all departments really was the smooth transition that many staff obviously took to working from home, and the little impact that it had on many areas of their service delivery. So that concludes the performance report, both for Q4 and Q1.
Thank you, Sam. Yep, thank you for that, and very much echo your comments just now, which I don't need to add to, but spot on in relation to still delivering, and obviously as you see there, you didn't need to go through them, but obviously all the achievements way and above considering the situation we're in. And I think there is obviously some self-explanatory in relation to obviously dealing with COVID and obviously dealing with LGR programme, which is, as you know, which is why the agenda of the administration is less than what it would be in normal times. And that was always agreed. So I think none of those red flags are particularly worrying from my point of view, considering exactly where we are at the moment. In relation to that, any questions for members? Councillor Lewis.
Yes, thank you very much. Well, just a general, I know certainly on the medical side where, basically the number of people attending or trying to attend has dropped dramatically. I mean, is our activity level in general down in a lot of areas? Are people not bothering to contact, or has it maintained the same sort of level with everybody working from home?
Sam, are you?
Hello, yeah, sorry. So I believe productivity, are you talking in relation to sickness figures? So we kind of think people are perhaps not calling in sick so much.
It was about the, general inquiries from the public with people being at home and so on.
Oh, okay. I think I haven't noticed in my department particularly a change in the level of inquiries from customers. I can't really answer for the rest of the teams, but it's something I can go back and ask.
Maybe I can help with that.
David might be able to help.
Yeah,
Yeah, I thought you might, as you appeared on the screen. So yes, I thought you might, Sam.
indeed. Yeah, I think activity levels are pretty much the same as they always have been. What has happened is there's been a massive shift from face-to-face to telephone and sort of self-help via the website. So customer services team have done a lot of work over the last few months in getting online forms in place so that people can fill those forms in themselves. And if they're struggling with them, or if they just prefer to talk to a person, then they phone us up. And what we found since we reopened the offices to the public on an appointment-only basis is that hardly anybody is actually making an appointment to coming in to see us, because they found that they can get what they need perfectly happily by either speaking to us on the phone or doing it themselves over the website. So it's been a significant change in the balance of the way people get in touch with us, but I wouldn't say that overall the activity levels have decreased much at all. As I say, they've just shifted from face-to-face to the phone to some degree.
Mm. Okay, thanks very much. That answers the question. I was very pleased to hear, actually.
Okay. Well, if there's no further comments from anybody or members, and see any more hands up, thank you for that, Sam. Appreciate all the update, and I know we haven't discussed it, but it's all of noting. So thanks very much. All right.
Thank you.
Okay, so moving on to item 6. Sorry, it's not so easy working without such a big table, but again, certainly would like again to thank Catherine and Kelvin for an excellent paper. It's really clear and concise, and considering COVID and all different bits of funding we got coming in and the expenditure from reserves and movement, it's probably one of the most difficult reporting periods that I've ever known in relation to keeping to grips with everything. So I appreciate you put a lot of effort into the papers, but I do expect people to have read them. So I think all of us, you don't have to go through them all, and but obviously you pick up the important points. And but again, it's a very good paper. Thank you.
Thank you very much, Chairman. Thank you. Try and keep it nice and brief and concise for everybody. So, as noted in the report, the Council originally approved a budget requirement of 13.283 million, and this committee is focused on the collectible income and expenditure of the Council, which originally was set at 12.5 million. Since budget setting, the total budget at 30th of June had been revised to 12.477 million, which related to incorporating the net interest receivable and supplementary estimates of 126,000 during Q1. However, the details in this report also include the net budget carry forwards approved by Policy and Resources Committee on 13th of July, totaling just over £500,000, and that's due to technical reasons in those budget uploads. So the table on page 1 of the report sets out the budget that is reported on in this report. Section 2.4 of the report details supplementary estimates which have been approved since the 1st of April 2020. That includes the 126,000 which is reflected in this report, and other supplementary estimates which have been approved since Q1, and that's for information for this committee. At section 2.6 of the report, details of budget requirements from the corporate contingency budget, which have been approved since 1st of April 2020, are set out there. And again, that's just for this committee to note. The finance team has received a virement request from the Head of Planning Services, which is set out at section 2.8 of the report on page 3. And this is as a result of a review of the management team structure in planning strategy services in order to simplify budget monitoring and budget setting activities. There's a request to 44,870 and 33,650 from cost centres relating to homelessness administration and housing advice respectively, to the cost centre relating to strategy services and enabling activities. In terms of the revenue budget, the estimated services outturn for the year is an overspend of 1.649 million, which is almost entirely attributable to COVID-related pressures. Table 4 on page 3 of the report sets out the actual expenditure to date against the budget and the estimated outturn for the year, with the variance against budget for each of the service areas. Please note that various sources of funding have been received by the Council to alleviate the COVID pressures, and these are noted later on in the report. As set out at section 2.3 on page 4 and in table 5, there is a pressure of 169,000 forecast on the vacancy factor budget, and this will continue to be monitored throughout the financial year. The Council's significant savings and pressures are set out in table 6 on page 5 of the report. This summary details that COVID pressures of 1.608 million, salary pressures of 169,000 and other net service savings of approximately 128,000 are forecast for the 2020-21 year. As already noted, the COVID-19 pandemic is forecast to have a significant negative impact on the Council's revenue budget outturn position for 2020-21 as a result of all the additional costs and forecast losses of income. The Council's been responding on a monthly basis to requests for financial management information from MHCLG at central government, and all of the costs detailed and lost income detailed in this report has been reported as at the same date as the 2nd of October report to MHCLG, and a reconciliation of those costs is provided at table 7 on page 6 of the report. As already noted, in response to the COVID-19 pandemic, the government has made 4.3 billion available to support local authorities in meeting the costs of the activities that they've been asked to deliver. The Council's allocation of the non-ring-fenced central government pressures funding is 1.125 million, which has been received in 3 tranches. Since the pressures the Council is facing and lost income are subject to a high level of uncertainty, the final allocation of the 1.125 million government funding will be discussed by the Budget Working Group, approved and authorised in line with financial procedures set out in the Constitution, and will be reported back to this subcommittee. In July 2020, the government announced a new scheme to compensate for lost sales fees and charges. This is a new one-off scheme for 2020-21 only, which involves a 5% deductible rate, whereby authorities absorb the first 5% of losses and then are compensated for 75 pence in every pound of relevant loss thereafter. Current calculations suggest that the Council may be able to claim up to 208,000 under this scheme for lost income. The Council's also received other ring-fence sources of funding, such as for rough sleeping and reopening High Street safely. And the known sources of funding are set out in Table 8 on page 7 of this report, which total 1.45 million. In addition to these sources of funding, we're expecting to receive new burdens funding for the administration of the Small Business Grant Fund and Retail, Hospitality and Leisure Grant Fund, and as well as the Local Authority Discretionary Grant Fund. We don't know what the amount of that new burdens funding will be yet. Therefore, it's not reflected in this report. And in addition, if we are subject to a local lockdown and we need to administer the new local restriction support grant, we would also receive new burdens funding for the costs of administering that grant. Recently announced new duties for the Council include the administration of the Test and Trace Support Payment Scheme, for which the Council will receive 24.6 thousand to cover administration costs, and additional COVID-related enforcement activities, for which 37.5 thousand is allocated to this Council. As set out on page 8 of the report at section 2.37, when all known sources of funding are considered, the overspend is forecast to be 376,000. This includes 195,000, which has already been approved by full council for economic recovery project costs. I won't go into Treasury management as part of this report. We do have a separate report on the agenda to cover Treasury management. So
yeah,
moving
on that, sorry, Catherine. On that note, as per usual, and sorry to interject, we normally take a break between the revenue and the capital bit. So I'm just thank you for being succinct and turning, but that's an opportunity now to split the two up and take any questions on the revenue before we go into the capital. So, Councillor Greenwood-Smith, you're up early with your hand there. So over to you.
Thank you, Leader. Could Catherine give me some idea of how the reference to paragraph 2.8, the homelessness administration and housing advice, the environment there, how does that have any effect on the budgets for those two areas? I think I read there that the budget, that the money has been taken out of those areas.
Thank you, Councillor. I can respond on that point. The budget refinement is requested just to simplify budget monitoring and budget setting activities, because as I understand it, there's quite a complex allocation of salaries at the moment within that budget area, and this is really just to simplify and centralise, particularly in the light of setting budgets for the Unitary Council. It's to simplify the budget monitoring activities and budget setting activities relating to strategy services and enabling activities. This has been discussed between the head of service and the management accountant, who oversees planning services. And it's been requested just in terms of a simplification of how those budgets are reported. It won't result in any additional or reduction of funding. It's just simplifying the reporting activities.
Thank you. There's no reduction in funding. That answers my question perfectly. Thank you very much for your help. Thank you, Leader.
Thank you. Yep, Councillor Brackenbury. And then Councillor Jenny after that.
Yep, thank you, Leader. So I was furiously trying to unmute myself, and I was muting myself every time. Anyway, yes. So in the overall strategic mix of things, it would seem that we are bailing the water out of the ship while it slowly sinks, but it is at least slowly sinking. So looking at all the external sources of funding that we're receiving from central government, looking at the loss of cost of income that we've received as a result of COVID, and considering the fact that COVID hasn't gone away and indeed seems to be, very much around at the moment, so with God knows what else might be coming down the line, it would seem that we have got fairly solid revenue accounts that will go forward into the new unitary. But it seems that, I just feel that we are obviously, there are serious pressures, but I think we're nearly at a point with this report where moving into the unitary will be an exercise which will have some deficit on the revenue, but not as bad as could have been anticipated. Would colleagues like to agree with that or not?
Are you looking for an officer response, Dave?
Yes, please.
Yeah.
Can I come in and answer that one, Chair?
I would love you to, Mr. Hammonds. I was looking at you wistfully.
In terms of the position where we are, obviously the report here is showing a contribution from reserves, so that will be a reduction as to where we are, or certainly where we started the year. Catherine did allude to some further government funding that we're expecting that was announced last week, and we're going to understand how much our proportion of that allocation is. Hopefully that will reduce down further our draw on reserves. As part of planning for the new council next financial year, we've estimated what the potential ongoing effects of COVID are, as have all of the other sovereign councils, and they're being factored into the decision making as part of the developing the budget for Northamptonshire. I think at this stage, it's whether we can say we're going to be passing over a balanced position in the current financial year. A lot of that will depend upon how much funding we manage to get from government between now and the end of March.
And how any funding such as that impacts on any additional costs that we may have if we're going to get a bad second wave of COVID.
Yes.
Okay, thank you, Leader.
Okay, thank you. David Jenny was just behind you, I think, on the raising of the hand.
Thank you, Leader. Yeah, I'm conscious that we've got Freedom Leisure coming up later on, but can you confirm that the costs of the cost to the Council of Freedom Leisure's position are included in Table 9 or not? Because I haven't been sort of able to reconcile that within my own mind.
Thank you. Yes, I can confirm that those costs are included in that table, reflecting, as at the date of writing the report, what might have been a worst case position.
Oh, that's good news. So that was the worst case scenario a couple of weeks ago, and we've probably moved on a bit since then. Thank you very much.
It's all right, I've lost some of you there, so if everybody's still with me.
Yeah,
I'm still with you, Chair. I might be able to point Councillor Jenny in the right direction in terms of seeing where the costs are within the report. So if you go to,
so people are dropping in and out of the screen, so I was just making sure everything was still all on there. That was all. So apologies on that front.
Okay.
Yeah.
If you go back to Table 6 on page 5, the second line down, Customer Community Services, forecast loss management charges and support provided for leisure contract. So that's where the number features, and that's therefore included in that 1608, which is the total impact of COVID as we've assessed it at this stage. So just to reassure Councillor Jenny that the numbers are indeed accounted for.
I'm very grateful for the Chief Exec's input. Thank you.
I think from my point of view, I mean, there's been obviously some change since the council meeting, because I think we've had clarification, and Kel was mentioned some weeks ago that we're now getting getting a portion of the management fee back, aren't we? Which we a council that was completely unclear, and we felt we wouldn't. So I mean, that is very much welcome in relation to that being covered. I've looked at all the. I've not looked. I've obviously read it quite a lot in relation to this. I mean, in relation to Table 9. And table we were just looking at in relation to Table 6, there's obviously an element that we haven't got back from the government in relation to COVID costs. You couldn't just pick up on which areas we are not. I appreciate we're picking up the first 5% on an element of that cover, so that might be the differential. But is there anything else at the moment that we are not being able to claim back that we've actually spent out on COVID?
I can just highlight a couple of areas. One in particular is commercial income losses, which would include our forecast pressure on Treasury management. We're unable to claim that under the lost income scheme, because that only includes service income, transactional income for providing services. Although it is clear now that we can claim for any losses of management fee on the leisure contract, because that is indeed one of the examples provided in the information set out by central government provided with the scheme details. It's certainly very clear we can't claim for any Treasury losses as part of that. I think another point to make is just that And obviously, as Glenn alluded to, the government has announced another tranche of funding. We're unsure as to what we might get from that, but at the moment, as it stands, it just isn't quite sufficient to cover the forecast pressures overall, what we've received so far.
Okay, thank you for that. The other thing I want to pick up on is the rough sleeping costs. We've got 108,000 in table 6. Is it right that we've still only had 7,000 from the government in relation to rough sleeping? Oh, so we're picking up that cost. Are we not able to claim that back, as if that's what we paid out in temporary accommodation to quite rightly get people off the streets who were sleeping rough? But shouldn't we be able to claim our full cost of what we spent out in relation to rough sleeping during the period?
So I can provide a brief response on that. In terms of specific rough sleeping funding, the council has received 7,500 from central government, which was issued right at the beginning of the pandemic. The 108,000 reflected in the report is a full year forecast summary. It's not what we've actually spent out so far, and that does include sort of the potential for a second lockdown and new duties that might be imposed as part of that.
No, thank you, Catherine, for that. My apologies on that one. I should have realised it's obviously the total year cost. Any idea how much we have spent on rough sleeping at the moment? Because it's certainly more than 7,000, and we're paying for it out somewhere. And it doesn't look like at the moment we're being able to claim that back.
Thank you, Chair. I would just need to go back and confirm an up-to-date figure, which I can do with the Planning Services Department following the meeting, and give you an update if that's acceptable. Yeah,
I'm happy to just come back to me with email. And if everybody else wants to know, perhaps you want to circulate it to other members as well on that particular one, because it's obviously a concern for me. Picking up on Dave Bracken for this point, I think the government quite rightly was saying, keep people off the streets once and for all with the strategy in relation to rough sleeping and homelessness. But they're on about specifically rough sleeping, and it's just the fact that our 7,500 was was nowhere near any reasonable amount in relation to the costs, temporary accommodation, and everything that's been paid out. So we should somehow look to be arguing to certainly get some payback on that particular amount. So it'd be good to thank you to let me know what we've paid out on that. Councillor Greenwood-Smith.
Thank you, Chairman. I can confirm that my last time I spoke to Carol Conway, we did touch on this particular subject. As you know, I have a bit of an interest in this, and I can confirm that it is considerably more than the 7,500 that we anticipated. But I don't have a final figure. I'll have to wait. We'll have to wait for Catherine to come up with that. But I can confirm that it's considerably more than the 7,500.
Thank you for that. Okay, I haven't seen any more hands. So after that breather, should I say, Catherine, if you want to go back, carry on with the capital part of the report.
Thank you, Chair. So the council's capital programme for 2020-21 was 1.031 million, and that was approved by council in March 2020. Since then, the budget has increased to 3.683 million as a result of approvals during the year, and that's set out in table 12 on page 9 of the report. As at the 30th of June, a small overspend of 24,000 was forecast in relation to additional ICT end user devices required as a result of increased home working due to the pandemic. The forecast funding of the capital programme is set out on in table 13 on page 10 of the report. In terms of reserves, when the council set its budget in March 2020, it did include a 91,000 contribution from reserves, whereas the forecast contribution is now 509,000. And the forecast level of earmarked reserves as at 31st of March 2021 is 18.9 million. Details of financial performance indicators are set out in Appendix 3 of the report, And at Appendix 4, there is a revised current fees and charges schedule, since there have been some minor changes to fees and charges in relation to legislative changes and minor corrections during the year. And I'm happy to take any questions on capital, reserves, performance indicators, or fees and charges. Thank you.
Thank you, Catherine. There's obviously huge amounts of figures and data in there, but thankfully, as Calvin said, we didn't have all the pages at the back of this report. Could you indicate where, and I'm sure I've missed it, but where we're looking to pick up the cost for the Enterprise Centre in relation to the capital element? I did look back for it again, and I'm sure it's there somewhere, but I don't know, we haven't decided how we're going to refund to pay that yet, but I couldn't find it anywhere, and I know I've missed it, so perhaps you could.
Sorry, Chair, you're looking for the
Enterprise Centre, because we haven't yet determined how we're going to obviously repay that and pay for that, and I just need a recall of where we'd actually place that. Is that in a reserve that's not factored in these papers at the moment?
So in terms of the Enterprise Centre, the funding is anticipated to be I can detail a separate breakdown of that following the meeting, but in terms of the funding, obviously we've had the 1.695 million of SEMLEP funding towards the Enterprise Centre. We've also got factored in 2.895 or similar number, 2.8 million for borrowing. At the moment, that borrowing is internal borrowing. It hasn't been externalised, but it is still assumed in this report that borrowing will be there and not used from reserves, although obviously that decision is still to be made by the committee.
Yeah, and I'm sure you're going to tell me it's linked to revenue reserves rather than capital reserves or something, I suppose.
The use of reserves is from, in previous years, some capital receipts have been used for the Enterprise Centre, which has been noted in a previous report to this committee. However, the funding this year is forecast to be from the Community Projects Reserve within earmarked reserves, and I'm very happy to provide a detailed breakdown of exactly how the funding has been done each year for the Enterprise Centre project.
Okay, thank you. I mean, we've taken, you know, you send me a drop-off line. Well, we've got the working party final meeting coming up, so maybe you're probably doing. I'm sure you're doing a report there. So, and not to hang on this particular point. So, but Councillor Jenny, I caught you. So, if you wanted to catch final comment on this item, or?
Yes, it was on this item. Thank you, Chair. The figures you just related, Catherine, do they include the underspend on the Enterprise Centre, or is that what was budgeted?
Again, I can detail that in the full overall report, and as already noted, I am working on some final figures for the working party meeting, and so those will be available at that meeting. There is an underspend, and I'll be able to report that at the working party meeting, exactly what the underspend is forecast to be, subject to any final account adjustments, which would be made before June next year when the account's finalised.
Okay, but they're not included in this set of figures, are they?
The underspend is not included in this report. This is obviously at Q1, and at that point the final reconciliation hadn't been done. However, I am now working on that for the next working party meeting. Okay,
that's fine. Thank you.
Thank you.
Okay, thank you all for that. I've seen no more hands waiting to go, so we can move to the recommendations or the noting. So page 12, 14.1. You see they're nearly all for noting, apart from D, which is approval of the environment. So if I can take them on block, and you're happy with that environment request as well, I'll take them on block, and take it as read that environment is being agreed. So if someone would happily like to move and second them on block, I'd be grateful. So Councillor Jenny moved it all, and Councillor Greenwood, yeah, okay. No, thank you all. So, and I think also, members, I think it'd be worth minuting a big thank you to Kelvin, Catherine and the team for the report, because as I said at the beginning, it was an excellent report and has made it very, very clear in the position we're in unprecedented times. So, okay,
Yeah.
everyone's happy with that?
Yeah.
Okay, thank you all. Okay, moving on then to the next item, which is the Treasury Management Report, item 7.
Thank you very much, Chairman. So this report notes the Treasury management position for the period to 30th of June in the current financial year. The Treasury Management Strategy for 2020-21 was approved as part of the MTFS in March 2020. An amendment to the Treasury Strategy was approved by full council on 13th of May, which provided a delegation to the CFO following consultation with the Chair of Finance and Performance Subcommittee and Governance and Audit Committee to temporarily increase the HM Treasury Debt Management Office counterparty limit from 10 million to unlimited if required due to exceptional circumstances. Section 2 of the report sets out a summary of the economic position during Q1 2020-21, and this has been provided by the Council's external Treasury advisor, Link Group. Just to summarise the economic position, although 2020 began with an optimistic surveys which pointed to a potential upswing in growth, as a result of the COVID-19 pandemic, overall UK growth fell very sharply in Q1 2020-21, and significant uncertainties remain as to the forecast rate of recovery. After the MPC left bank rate unchanged at 0.75% in January, the onset of the epidemic in March forced it into making 2 emergency cuts in bank rate, first to 0.25% and then to 0.1%. And these cuts were also accompanied by an increase in quantitative easing. It's not currently thought that the MPC would go as far as to cut bank rate into negative territory, although the Governor has said that all policy measures will be considered. The government and the bank were very concerned to stop people losing their jobs and to support businesses during the pandemic. And as a result, various measures and schemes have been introduced to subsidise both employed and self-employed jobs and businesses during lockdown and the prolonged period of social distancing. A raft of other measures to help businesses access loans from banks, with government providing guarantees to tide them over lockdown, have also been provided. The government measures to support jobs and businesses will result in a huge increase in the annual budget deficit for the year, from about 2% to nearly 17%, and that was the forecast as at Q1. The ratio of debt to GDP is also likely to increase from 80% to around 105%, and again, that's the forecast at Q1. The annual inflation rate dropped to 0.5% in May from 0.8% in April and could reach 0 by the end of the year. The annual inflation rate for August was 0.2%, and that's the most recent available figure. A summary of the economic position of other world economies during Q1 provided by the Council's Treasury Advisor is set out in Appendix 1. A summary interest rate forecast is set out in the report at section 2.11 on page 23. It is forecast that bank rate is unlikely to rise from its current rate of 0.1% for the next 2 years, pending a protracted recovery period. For information, a summary of gilt yields and PWLB borrowing rates is included at section 2.13. Just in summary, during Q1 2020-21, gilt yields fell very sharply to unprecedented lows as investors panicked during March, selling shares and in anticipating recessions, and moved cash into government bonds. The PWLB certainty rate is gilt plus 180 basis points, and it's forecast that there will be little upward movement in PWLB rates over the next 2 years due to the prolonged recovery period. Moving on to the annual investment strategy, the average level of funds available for investment during Q1 was 32.47 million. The level of funds available was mainly dependent on the timing of preset payments, the receipt of grants and progress on the capital programme. The level of funds was significantly over budget of 26 million due to a step change in the level of cash balances held on a temporary basis, and this was significantly due to the levels of support for businesses and individuals which the council was administering at that time on behalf of central government. A summary of the Council's portfolio of investments at 30th of June is set out at section 4.1 on page 26 or 6 of the report. The average return on the Council's portfolio was 0.39%, although this is 0.42 percentage points above the 7-day LIBOR rate. It was significantly below the budgeted rate of 0.8%. Although the average return on the Council's portfolio in Q1 was 0.39%, maturing investments will have to be reinvested at lower rates of return due to the profound changes in the market as a result of the reduction in bank rate. Work has been ongoing during the first quarter of this year to set up access to a money market fund trading portal, and access to this portal will widen the amount of counterparties available, which will assist in managing counterparty and liquidity risk for the Council. During the first quarter of 2020-21, the Council has operated within the Treasury and prudential indicators set out in the Treasury Management Strategy Statement and in compliance with the Council's Treasury Management practices. As noted at point 6 of the report on page 7, and as has been previously reported to this committee, counterparty limits were exceeded at the beginning of Q1 before the amendment to the Treasury Management Strategy, and there has been one minor breach towards the end of June for 1 day only, resulting as a result of technical operational issues. That concludes my report of Treasury Management for Q1 2020-21, and I'm very happy to take any questions.
Thank you, Catherine. I caught Councillor Brackenbury earlier. I caught you. So, Councillor Brackenbury.
Thank you very much, Chairman. And once again, although it may not, the Treasury Management interest rates that we receive may not be quite on the budget, they have considerably exceeded the LIBOR rate, which is on the chart on 4.2. And so once again, and I know, Leader, that you will remember that we say this so often, but once again, congratulations to our Treasury Management team for all their hard work to get, you know, a better performance than a lot of other entities would have done. It is interesting also, Leader, just looking at the longer term situation. When this all came about, there were considerable devaluation of banking organisations, as you know, indexes or sort of S&P credit ratings, which have now very much come back. If you look on the report on 25, paragraphs 3.3 and 3.4 are quite interesting. So the economy is obviously taking a tremendous hit from COVID and will continue to do so, but it doesn't seem that there is any structural danger to the economy so long as things remain in check as they are going forward. There will be obviously financial implications with all the quantitative easing that's been going on, which will go forward for years and years, but we were in a worse position 6 months ago than we are now. So, you know, my point really is to thank the Treasury Management team for all their hard work in such extremely interesting and difficult circumstances. Thanks, Chairman.
Thank you, Councillor Brackenbury, and yeah, I agree with everything you said. And I've seen the eye-watering figure of gilt investment, so I think we've got quite a bit to pay back unless we take the view of America and not worry about our debts. In relation to, and this might be one for Glenn, Catherine. In relation to 1.2 and our temporary changes in relation to obviously all the funding that came in from the government, is that still in place, Glenn? So if there is another outbreak, we haven't got to go through. I know it said temporary, but is that a change that we actually agree to leave flexibly in case we have another outbreak that we haven't got to do it again? Is it still in place?
It is, yes. It was at the time we did a temporary one, and it was then subsequently approved into the strategy at full council. But it does require, if we get into that position again and have a lot of cash coming in from government, then there's a delegation in place for me to talk with you as the chair of Finance Sub and also the chair of Governance and Audit to enact that delegation.
And I take it our financial levels now are low enough that we haven't got any money invested in with the Treasury now. Is it all back in with where it used to be, or we still got some money invested in with the government?
Well, it's back in line with our original limits, yes, and sometimes we do invest with the government. Obviously, it's a very low rate, but the flip side of that is it's a very high credit rating.
Yes, yeah. Councillor Lewis. You're there. Good.
Got it. Thought I'd mastered that. Yes, thank you, Mr. Chairman. Yes, bit of a side one really to some extent. In 216, the last sentence says it is clear that the Treasury will no longer allow local authorities to borrow money from the PWLB to purchase commercial property if the aim is to solely generate an income stream, assets for yield. I mean, how would that apply to, I mean, we built the Enterprise Centre, which ultimately the aim is to produce a positive revenue stream. So would it affect doing things like the Enterprise Centre, or, you know, that is got other aims, which is to provide jobs. So would it actually be okay to borrow money to do that?
Yeah, if I could answer that one. In terms of the changes that is being implemented, it follows a big consultation exercise that HM Treasury have undertaken, and it's only for areas which are solely for commercial income purposes. So where it's looking to generate jobs or regenerate an area or promote growth, those aren't included within that, and you can still borrow from the Public Works Loans Board. It's not to say that councils can't undertake solely commercial investments. It's just they can't be funded through the Public Works Loans Board and would have to look at other sources of financing.
Okay, thanks very much.
Thank you. In relation to that, Glenn, I mean, my understanding, and just speaking hypothetically, but naming names though, but say something like Kettering, who borrowed huge amounts through the Public Loans Board to buy properties just to get a commercial return elsewhere in the country. That's the kind of thing they're putting an end to, isn't it?
It is, yes, although this change won't affect historic transactions that have already been done. It will only affect future ones.
Thank you for that. This isn't for today, but that was one thing that was concerning me, of course, you know, with a different hat on. So, okay, so if everybody's okay with all that, then on page 16.1, the recommendation as ever is for noting. So if everybody's happy with that. Okay. Item 8, which is the debt write-off.
Okay, thank you, Chair. So this report is my annual report regarding debt write-offs and outstanding debt, and this is our position that we're at the 31st of March 2020. So as you'll be aware, we collect a lot of money on on behalf from our residents and businesses and such. This could be with regards to council tax, business rates, housing benefit overpayments and sundry debts. So last financial year we collected £97 million. But what we do recognise is that a small proportion of money that's owed to us may not be collectible due to matters outside our control. So such as bankruptcies, IVAs, and things such as that. And just to make you aware that the decision to write off debt is always our last resort after every other method of collecting has been exhausted. And, you know, our officers work really hard at doing that to ensure that we protect the public purse and can continue running our services. Last year, we actually wrote off 0.33% of the money that we collected. And the year prior to that was 0.31, so there hasn't been a substantial increase in what we've written off year on year. Write-offs over £25,000 require committee approval. I can confirm that no write-offs over £25,000 were written off last year. Talking through the specific areas of outstanding debt, so council tax, we currently have £2.8 million of outstanding council tax. There is an increase on last year by about £400,000. You will note though that a lot of the debt is with 43% of the debt is with enforcement agents. So it could be that they're actually on payment plans with the enforcement agents, and even through COVID we were still actually getting regular money through from our enforcement agents, although they had to pause on other work. There's also 14%, so £387,000 that's not actually at enforcement stage yet, so that's where bills have been issued late in the year, so they're not actually in the recovery cycle yet. Moving on to business rates, so the debt outstanding is £638,000 and the previous year it's £628,000. There's only a 10k difference, which I think due to the circumstances is very good. Do want to highlight though, last year the number of accounts in arrears, there was only 110. This year there's 1,200. Just over 1,200 accounts, and this is because I've been reporting for the last couple of years that we had one business that was going through a national appeal. So it was just one business, but it was looked to be split into 1,500 separate businesses because they're storage pods, and that actually went ahead. So our businesses increased from that one business to 1,500, so we had to administer that and bill everybody, and that only actually came into effect the last quarter of 2019-20. So, and they're very small debts going back to 2015. The appeal went back that far, so we had to bill back about 5 years. So that's why the number of accounts on there are huge, because there's a lot of people affected. A lot of these are for people who are actually abroad. Some of them got small business rate relief, and the company actually went into administration as well, so we had the difficulty of trying to find out who was actually liable for the rates on all the 1,500 pods as well, so it was a huge exercise. The problem we have is that they're very small debts, so they don't actually meet the cost of a summons. So, you know, we're trying our best to recover that money, but that's why the number of cases have actually increased. So not the debt, it's just the number of accounts because of the situation. Moving on to housing benefit overpayments. Outstanding debt is just over £1 million, and this is 150k less than our position last year. So that's really good, but I think that's expected. Basically, housing benefit cases are being transferred over to Universal Credit. So our caseload of housing benefit customers is reducing. So the number of overpayments we're creating are reducing because they now sit with Universal Credit. So we expect year on year for that amount to really reduce each year. And also another thing that was of our advantage, finally we had access to HMRC details, so we can find out people's earning, who they work for, so we can do attachments to earnings, which we didn't have previously. So that's really helping with collection as well. And then moving on to sundry debts, you'll see there we've got 41k outstanding. It was a lot less than last year, and I don't know whether Catherine wants to pick this up or not. It looks like we have an amount more that's in dispute this year than we had previous years. That seems to be increasing the numbers, but I don't have exact details of what that relates to.
So, sorry, Lucy, did you want me to come in on that?
Yeah, it's on the sundry debts with 41k outstanding this year. Last year it was only 12.5, so I can see that the in dispute amounts increased from last year. It's up at 18,000 at the moment. So
yeah. Yes, I think that's a significant part of that is due to one single dispute, which is being overseen by the head of service, and that is actually being dealt with.
Okay. So that's the concise overview for you, so happy to take any questions.
Thank you, Lucy, and thank you for the concise bit as well, but also thank you for the report. Any questions from members? I haven't seen any hands. Yep, Councillor Lewis. Oh, you okay about it? Okay, fine. Not a question. All right.
No, what a question.
No,
no, I think that's a very clear report, and I think it's interesting. There's really, with all the problems at the moment, there's not, you know, too many major changes, really, are there? But I've got one absolutely minor point in 4.6. There's a table there. The last line says number of accounts in arrears 375, number of accounts on payment plans 1, and the number of accounts not on payment plans 371. So that should be 374, or the number of accounts on payment plans should be 4.
Oh, out of all of it, I've got one figure wrong. Come on, give me a break.
Sorry about that, but
apologies.
I have to maintain my reputation.
That just goes to show at the beginning of the meeting, I said we have read the reports and you just need to be concise. So that just backs up that you got a really good, strong finance sub team here that go through all the papers. Councillor Greenwood-Smith.
I can confirm, Chairman, as his vice chairman, that the chairman of PNR is fastidious in his eradication of the little odd blip and comma.
Thank you, Lucy, but that can turn into a lot of money sometimes. So thank you for that. Lucy, I appreciate during COVID and enforcement could be on all manner of things, and it's not just about bailiffs knocking on doors to get the thing. But obviously that was all suspended, which I think has been lifted. But I'm sure that's an element of actually getting in relation to our debt recovery. Do you anticipate things being worse because the bailiff element hasn't been able to quite rightly happen during this lockdown?
I don't actually, because we still had a steady flow of income coming through from the bailiffs even during COVID, although they couldn't go out doing their enforcement work. The plans that were still in place didn't default, so we still continue to receive money. Like you say, that's been lifted now, and they can now engage again with our customers for those that we need to, but we're not actually referring new cases to them at the moment. With regards to statutory reminders, as you'll be aware, we didn't start issuing those until last week. What we thought we'd do was send out what we call soft reminders first to try and get people to engage with us without going through the official enforcement route. Like I said, for businesses, we've now actually last 4 weeks, we've started ringing businesses that are in arrears rather than sending reminders, and we've had such positive feedback from that and quite a lot of arrangements that have been made. So I'm hoping in this month's collection rates that will reflect. Also with the official reminders, we're doing those on a phased basis because we've been told that we can actually attend court. Well, we can actually obtain liability orders at court. There's a date in December that's been set. So I think all these things will help, but I'm happy to report that last month Our council tax collection target was 57%, and we actually achieved 56.76. So we're 0.24 down on target, but the previous month we were 0.4 down. So that's a positive. With business rates, our target for September was 56%, and we achieved 53.63. So 2.37 down on target. But in August, we were 3.3% down. So that is looking positive. But again, we're aware that the end of the furlough scheme is coming at the end of October. There is replacement schemes, but obviously they're not as generous as what people have been getting. So I think come the end of October, so at the beginning of November, we'll start seeing what impact that has as well. So although I'm really happy with the collection rates at the moment, due to the little recovery work that we've been doing, the statutory stuff, there is always the risk of a second wave and furlough ending as well. So we're just hoping it stays as it is, but we're being realistic that it might not always be that good.
Okay, thank you for that. Yes, I thought Councillor Jamie was waving to speak, not just waving his pen around. So yeah, over to you. Or not?
Can't hear anything.
You're on mute, Councillor Jenny.
Yeah, see, the rest of us were just letting you do it all on mute, to be honest.
Well, as soon as Councillor Lewis wants to be so fastidious, that table is either £1,877 out, or the figure for the year 2017-2018 needs to have one deducted, because you can't have a minus number on there. So when you do your reconciliation, Lucy, you either need to take out a 1 under the number of accounts on payment and leave it and deduct 1877, or you need to put your other one up to 222. But Councillor Lewis missed that, so I'll just draw everybody's attention to that. And then try gracefully. Back to being muted.
For a brief moment now, I thought I was at the CITFA conference. I think I'm going to go to the. The recommendation somehow. So on page 41, on 14.1, obviously, recommendation is to note the position. So everybody happy with that? Okay, quickly moving on then before we have any more comments on that paper. A change over to Greg on item 9, which is the economic recovery prospectus. Over to you, Greg.
Good morning, everyone. Thanks, Chair. You've got on page 43. Really, just to bring your attention to section 1.2. I won't go through the detail, but just to say that I'm sure a number of you are aware now that the council, for all this work that it's done on this, has been put forward for a Rose of Northamptonshire Award, which obviously during these hard times, it's it's nice to take a backward step and see the recognition, the recognition for the hard work across the council. But just to bring your point, one particular point on that list, I just think in particular, there's been some really good work with the town councils, and in terms of actually the joint work into reopening all the high streets, which is ongoing. Going on to the next page, page 44. You've all got a copy of the new prospectus in the appendix. That's the current version. And I think just really to put a focus on some of the elements for the next 6 months, because although a lot of good work's been done, there's still much to do. And just to pull out a couple of points, we're working with the Job Centre Plus and other partners to really look at the position of unemployment and job match, and that's starting to accelerate now. And we've had a number of meetings with them to understand exactly the way that's going to work. Obviously, it requires a flexible approach because we don't exactly know how unemployment is going to take shape, but we know we're going to have to do something. But that was underway in terms of convening the partners and putting in place a programme to bring all those partners into one place. We're also looking at a shop front in Rushden Lakes to try and the coverage and reach of the existing offers and the new offers, and to actually take the offers to where people are. And that is also taking shape. And it's still not, we're still not signed up yet, but we'll hopefully get that done within the next couple of weeks, which will really push us for the last for the next few months as we move towards the new authority. We're also trying to seek to extend the cover of this within the context of North Northants, and to have an eye on the future of that. As you already know, we've got BCW on board as part of the shared service, and they put their name to this document. Also, the County Council has as well, because they see it as an excellent example of what we should be doing. Questions are still being asked of Corby and Kettering, who are not board yet, but there's still some way to go on that. So this document is a working draft, and it will always be a working draft. It has to be. So the view is that depending where we are after this meeting, we'll look to put that out as you've seen it in the appendix, with the view that as and when Corby and Kettering come on board, we'll update it at that stage. Also, very importantly, linked to the Oxford-Cambridge work and the work at SEMLEP, we're talking to them about the way in which we look to take all that good work being done at the Oxford-Cambridge ARC level and to make sense of that on the ground. So there's a discussion underway now to understand exactly the way in which the Oxford-Cambridge ARC economic perspectives will be translated to work on the ground, and we're one of the first partners to start to do that. So you've seen, if you go onto the following page as well, to page 46 of the reports, you see where we are in terms of budget. We've spent and committed roughly, we spent £47,000 approximately up to the end of last month, and the view is that will accelerate over the coming months. Obviously, the key element to this is flexibility. We don't have to spend it all, but it's there as a pot to enable us to respond to the needs as they move forward. So before we move on to the recommendations, I'll take any questions or points of clarification.
Thank you, Greg. I've got a couple of people with hands up, and I've got something to check with you as well. But Councillor Brackenbury first, and then Councillor Greenwood-Smith to follow.
Thank you, Mr. Chairman. And Mr. McDonald will remember that at a previous finance sub-meeting, I was a little bit terse about Workstream 1 and its massive budget. But I do congratulate the team that the overall variation on that budget seems to be £46,000 in savings, and obviously seek confirmation from Mr. McDonald that the 46,000 in savings that are identified do not stop the success of this scheme, because now, just to make a quick comment, not a question, obviously it's very, very encouraging in these difficult times that we are working so proactively with the local community and local business to try to get through this pandemic. So once again, I think congratulations should be extended to that team. But I would be very interested from Mr. McDonald just to make sure that the various work streams are on track and are properly resourced where appropriate.
Did you want to cover that now, Greg? Then
I think, as we said at the start of the last meeting, it was very much a finger in the air, and a section that a 10.1 just reflects that we now estimate that we need to put more resources into Workstream 2 on the job match front. So that's based on current estimates. That could and will likely change again, but it's just to give you a sense of where the funding is. But the most important part of this funding, and I can't stress it enough, is the flexibility. Is that if we had to come back every 5 minutes for approvals to move a little bit of money here and there, we wouldn't be able to meet the needs of the actual the economy and those who are suffering as a result of the pandemic. And I think it's something that I think is it's not rare, but I think it's a major step forward. That at the last meeting we agreed that flexibility. So I think what you see there is the example of why we needed that.
Thank you, and you make it very clear on 10.2 that it does have to be flexible. And so, as I say, good job on what you're doing. Thank you.
Cheers, Councillor.
Councillor Greenwood-Smith then.
You're on mute. Glenville on mute.
Unmute Glenville.
Glenville on mute.
Sorry, my question was based more to be placed more at the end of the meeting, Chairman, as a throwaway line, not to be mixed up with the serious business of the agenda item. So I'll wait until the end, if I may.
Fair enough. I saw you waving. So,
Yes,
Greg, I'll follow on from Councillor Brackenbury's comments, and again, and noted thanks to you and your team for all the efforts that are going into this, and quite rightly around the flexibility that from the last meeting to be able to deliver things quickly. The not issue, but I don't want to follow Councillor Maxwell's famous line, so I'll word it a different way. The point I want to raise. That's a better way of doing it. Item 5 in relation to the long term, the 15,000 put into the long term part of it, which is 2.10 on the phase 2. I think it's producing an economic development strategy for new Northants Council. I mean, obviously we're here for East Northants at the moment, but in relation to that. And I understand the reasonings behind developing that, but could you just outline whether that's a refresh of our economic strategy, or you're starting to work up a Northants strategy in relation to economic development?
No, there's two different strands there, Chair. The first bit which you referred to in terms of how our economic strategy relates to Northants, we will need a new economic strategy for Northants, and I think that will be developed over the coming year, and hopefully with a fair wind this time next year we'll have that strategy in place. What that £15,000 there is for is working as East Northants through Recovery Through Enterprise, and those partners are on board, working with the Oxford Cambridge Arc and STEMLEP to translate those strategic ambitions into action on the ground, and that's one of the key actions that came out of the Oxford Cambridge Arc group last week. They said they've got the actual document has been launched now. The next step is to make sure that it lands properly across the patch. So what we've done is we put ourselves forward to say, we're happy to work with you to understand the way in which we could start to shape some work about how we're working it in through Recovery Through Enterprise, to understand that exactly there could be some extra bits of work to do around a particular sector of life sciences, or doing some more analysis about the broader economy or the impact of COVID. But we need to actually have some funding to be able to have that interface. Eventually, when that's done, and that'll be done between now and next March, that would feed into the new strategy for Northants. At the moment, as you're saying, Recovery Through Enterprise, it does, it's backed by ENC, BCW and the County Council, and we're working hard with Kettering and Corby to try and align with their activity. And ideally, it would be good to do it all under the same strategy. But at the moment, we're all our own entities, and obviously doing our own areas of work. Eventually, those will have to come together in time for the new authority, but it's a question of when.
Thank you, Greg, for that. That clears that up clearly for me. I mean, you probably guess where I was going to go. Perhaps it's that if it was an LGR program element, then obviously we would take it out of those funds rather than the funds that obviously we're utilising through this process. But you've absolutely covered that off exactly where I was going with that. But don't get me wrong. I mean, I think it's certainly an area that's lacking at the moment in relation to the Northants work streams. There isn't really an economic development strategy, as you know. So just thank you for your response, and I'm aware of the situation all around, to be honest. Councillor Bracken, Councillor Jenny.
Thank you. Just a comment. I welcome the support for the Oxford Cambridge Arc, and conversely, I note the absence of any comment of England's economic heartland. Do either you or the leader, Greg, wish to comment upon that at this stage, just so that we know exactly where we're going?
I could provide some comment on that. I mean, I'm involved with the England's Economic Heartland. It's very much based on the transport element of it. So we're working with other teams across Northants and East Northants to respond to the current consultation on the transport strategy. But very much our focus and our work, and my work in particular, is with the Oxford Cambridge Arc, and that provides an overarching vehicle through which we look at all those different strands of work. I would also just say, actually, for the record, and I just didn't say earlier, I mean, it is, as I mentioned earlier about the award, I mean, this has been an excellent team effort across all parts of the council. So I think I just want that for the record to say it's not just the enterprise in East Northants strand, it's everything that's been done in business rates, environmental services, and I just hope we can take this forward to the way in which we work in Northants.
Greg, all well, absolutely noted, and pass on thanks to whoever necessary on that basis then, and you're absolutely right. In relation to Councillor Jenny, as he put it to both of us, I think Councillor Jenny's fully aware that there are issues around funding, and it will depend where that funding goes in relation to who survives. I think going forward, if we're working more with the Oxford Cambridge Arc and the Central Corridor, then the funding through EEH may disappear and may go elsewhere, but that's all to be seen, and that's at the moment somewhat out of our hands. But it's certainly something the two new unitaries will have to consider where they put their funding. But I think you know that already. So if there's no more points to raise, I will go to the recommendations under 12. Just one point, Greg, and this isn't being picky, it's just a matter of design. The new one came out in the post. Are we going with the one that's attached to the papers, or the separate one that came out? Because they're slightly different.
There should be a new one, and the new one has the 3 leaders at the bottom of the forward.
I don't think I've even got that one then. There must be an even later version.
That was sent out on looking to Louise, I think I sent out on Friday.
When you say 3 leaders, where's that?
So on, it's inside, I think, the first page. There's a message from the leaders. I think on your one it's from
the next pack of info. It's just there, look.
Yeah, okay.
That's the one. That's the one.
Very well written.
Yeah.
Thank you, Greg. This is going to sound picky, and it's all about partnership working. I understand that. But on the fold, if we had this, it looks like it's county council led because they're in the middle. And as we've initiated and done all the work on this, Greg, it might be better if we're in the middle of the arrows rather than to the side, because it looks like it's a county council document.
Yeah, okay. On that, is that on the front cover?
Yeah, the one on the front cover.
Yeah, okay, okay, yeah. I take that. No, it's all important. All
yeah, it is important, because if we're led and fronted on this, then it shouldn't look like a county. You don't need to keep your hand up, Councillor Brackenbury. You turn into Councillor Mercer. I'll catch you in a sec. It would look better. Okay, yeah, Councillor Brackenbury, that was a bit below the belt. I do apologise. Please go ahead.
Not at all. Poor Andy's ears are burning wherever he is. No, I agree with that point. And to follow in Councillor Lewis's exercise of the fastidious, can I say that Councillor Griffiths of Wellingborough is going to be upset if you don't spell his name correctly?
Oh dear.
Yeah, I would say I've been through it since I got it last week, and there are a number of well, it will need a proofread, which it will get next week.
Yeah, it does.
That one, yeah.
Councillor Greenwood-Smith.
Thank you. Just 2 quick points, Chairman. Try as other councillors might, I fear they'll never come close to Councillor Lewis's ability to root out the typos. And secondly, I'm a bit concerned that Greg is not in his usual position on the beach this morning. And does that bode ill that you've been driven indoors in any way?
I'm actually I'm nearer the beach than I normally am. I'm in Whitby.
Ah, well done, sir.
Yeah, that's fine.
Fish and
I'm
chips
down
for
the
lunch.
beach in about half an hour.
Okay. I thought the sound was a bit more different than usual, Greg. So obviously the Wi-Fi isn't so good up there. If everybody's content, I think perhaps we can move to the recommendations and 12. So 12.1. Obviously, they're there in front of you. You're all happy to move them on block?
Yeah.
Obviously to note and then approve. Yeah, that's okay. That's all carried. Okay, and pass on, as we said, Greg. Pass on thanks to whoever necessary in relation to producing all this work, because we are, thanks to you, leading on this more than anybody else in certainly in this part of the county anyway. So thank you for that.
Yeah, we'll do. Thanks.
See you next Monday, Greg.
Oh, I don't think he's finished yet.
No, there's more. Escape to the beach. Yeah.
Oh yes, that's it.
Right.
Sorry.
Okay, so everybody, and we'll have to wait if you agree this. So please note we will be pausing for a few minutes or a minute or two. If happy to move to exclude the public and press and to go into private session.
Move.
Yeah, all happy.
Agreed.
Okay, thank you all. So that's carried, and we'll wait a few minutes while we come out of the live stream.